Good evening, guys. Welcome to another Full Transparency Trading Session where I'm your host, Sebastian, and I'm here to talk about the state of the market currently, have a quick discussion about it and what's going on and why it is not a good thing. We are heading towards this weekly 200 EMA, which could eventually meet this point right here, and we did not want to see that happen in the beginning of a year. This is just February right here. This is just the end of March, heading into April 1st on Tuesday. And this is a bad start to our year. Normally at the start of the year, we continue the path of rising from October into December that we had. This year we are falling massively, and it's not a correction. It's not a correction at all. This is a very poor start to a year. We're going to go over the fear and greed index. I don't have to sell the fear. The fear is selling itself. We are in a state of extreme fear right now. Now, as a day trader, it doesn't affect me, but as an investor, it does. And no one wants to see their investments lose $50 on the S&P 500 over the course of a month and a half, or $200 on Tesla, or just any number of stocks. Let's just go through some stocks to show you what's really happening since January. January 153 on Nvidia. Nvidia is down $50. Tesla in January, into December, we'll choose right here for January. We were at $430. We are currently down $200. Not one, but $200. So that all of that running up that they did in November during the election cycle, and when he threw in with the president and stuff like that, all of that running up and then some has been erased. We are approaching their low level, which is right here. So let me get my alerts back. Beep, beep. We'll just keep on going back pages until all of my alerts are back. There we go. And we'll head over to M&Q because it's a little cleaner. Now on M&Q, the current range that we're in is this range right here. Pushed all the way down through our demand zone. We're at this point in our range to this point in the range. We're at a new low that we're heading towards. So got to keep an eye on that on the weekly. Put that all the way out to the end of the year because these will be valid through the end of the year. This used to be a massive demand zone. It is now a massive supply zone that we're trying to push back up towards. But first, we need to make our way up to 20,000, which is way up here. So the highest that will probably go here recently would be looking at about 20,000 as we work our way back up. It is going to take a lot of work, but then you have to get investor confidence back in it, and right now the confidence is not there at all, and that is a hugely negative selling point to start your year. In July, we had what's called a correction. July was a struggle to push higher, so we got to the all-time high. We fell all the way down to the previous demand zone, bounced off the floor of that demand zone, which is about $510 on SPY, and then that allowed us to grow all the way up to the high, which was $613 on SPY. This is not the same. That was July. This is January, February, and March. This is not a correction. A correction would have been this level right here and then going higher. A correction would have even still been this level right here at 20,000 and going higher. We have now broke that by 1,000 nearly. That's bad. It's real bad. We're heading into crash territory. We're heading into a $100 loss on the stock market. Let me go to SPY to show you one more time. Like I said, I'm not selling fear, but I'm showing you where we're heading, and it's not a good look. We are over $60 lower than we were at the highest point. This was about a $60 fall as well. This is about a $55 fall. We're at $60 now. If we start to go lower and trend into this area right here, even at 540, we're approaching crash territory. We hit 530, we're in crash territory. We hit 510, the market's crash and could go all the way back to 471. People would lose millions. We're not going all the way down there. No, that's not how the market works. But this is the worst the market has looked since about 2022 to start a year. 2021 was here. This is how 2022 started. 2022 was a very bad year for the stock market. This is post-COVID. We were drawing down. It was at 480. We went all the way down to 360. So we dropped $100. This is looking like post-COVID territory. And that's not a good look. You see, I got one drawn out right here. Went back up to about 50% of the move. Went down even further. And then from that point on, when you get to the weekly 200 EMA, you do get a large rise out of that. And you stop having such dramatic pullbacks and going higher and higher and higher. But we don't want to get to the weekly from where we're at currently. That would be a $200 fall in the stock market. That is a collapse. That is major red territory. But yeah, the fear is out there. And like I said, I am a day trader, so it does not have a massive effect on my day-to-day, but as an investor, it does have an effect on my portfolio, and the portfolio ain't looking too hot. Luckily, I don't own any Tesla or Nvidia, because at the time they were a little bit too expensive for my taste. We got some Apple. Apple's still down a lot. It's down $40. That's okay. Got an Apple way down at 165. So, we're still good there. But overall, what's happening in this market is not a good thing for the market to start a year off like this. This is dangerous territory. But like I said, we're not here to sell fear. The fear is selling itself. Just watch what's going on in the market. What we're here to do is set up good trades, and we're looking at the market to run to 19,000. I like to see a 19,000 flat in the market, and then take it from there, from 19,000 to like 19,300, 19,500, get myself a massive trade. But as of right now, we're down $140. We were down $500 on Friday. We are down another $140. So that takes us to a drop of about almost $600 over the course of this last week. If you look at where the week started, last week we started at 500, 20,500. We went down to 20,000 right here. That was already $500. So, looking at a loss of $1,000 over the course of 2 weeks. Big loss. Weekly there, we are up here at 576. Went down about $20 over the course of a week. So we're having some bad weeks here. And we're no longer in correction territory. We'll see what this next week brings, but we need to rally to the upside. We need to get out of the extreme fear, get to regular fear, and get neutral fast as possible heading into the springtime. And it's tax season, so people have money to invest and people have money to trade with. It's just dropping. But this has been another episode of Full Transparency Trading. We're talking about what the market could possibly do tomorrow. Like I said, I'm looking for the drawdown to 19,000 and then get me on up to 19,500. Even a 19,250 will be all right. Even a 19,250 will be fine. Which we almost hit. So let's put a nodie at 250. Put it at 251 so I have a chance to get in there. Then of course let's mark this down on the weekly right here. We're currently sitting at a weekly support level. Strong weekly support level right here at 250. We're at a weekly support level currently that we're struggling to get back up above. You guys know the motto, take the easy money. It's been another Full Transparency Trading Session. I'm your boy Sebastian, and I'm out.